market is so exhausted to the upside, particularly in Mag 7. And just to be very clear, the S&P 500, which has 500 stocks in it, two of those stocks, are 15.5% of the index, which is Nvidia and Microsoft. It's an extraordinary situation, to say the least. Back in 1982, it was IBM and AT&T, and that got to 10.2%. So it's not so that was a big number, but 15% is a whole new ballgame.
Right, welcome to our specialist part of the week, when we have the #1 tech analyst in my book in this country. It is Piers Buckworth.
So here we are. So for those of you who have not been watching this show recently, we are at yet another extraordinary moment. I mean, let's just get straight into what happened yesterday. And we'll finish with a micro and start with a macro. Market is so exhausted to the upside, particularly in Mag 7. And just to be very clear, the S&P 500, which has 500 stocks in it, two of those stocks, are 15.5% of the index, which is Nvidia and Microsoft. It's an extraordinary situation, to say the least. Back in 1982, it was IBM and AT&T, and that got to 10.2%. So it's not so that was a big number, but 15% is a whole new ballgame. So the concentration is clear. Whether that's a problem or not is an open question. It's been debated for many, many years. I suppose it's only a problem if those two companies start to have problems, but there's no problems at the moment. So there's nothing. And every single time we have a potential moment where the market where the professionals, might actually step in and sell something, they have to step back again. And yesterday was a wonderful example. The CPI, all the whispers, all the hedge funds I speak to, everyone was gearing up for just a slightly hotter number because the expectation that tariffs are going to start to come into the number.
Which they got in the core.
They did get into the core, and the numbers were only not hot in the year-on-year number. The rest of it was kind of in line, and if you look at the detail, airlines were a big contributor. But net, it wasn't hot, and it wasn't, and it was
Goldilocks.
It was more. It was yet another Goldilocks. So the professionals went, oh God, stepped back, and the machines and the retail went bang, and we're up to new all-time highs. And then, of course, when you get that situation, the futures the next day do exactly what they're doing now, which is sit, do nothing, and then grind to there.
Yeah, 20 basis points.
Where are we now? Are we off the highs?
When I woke up this morning, I opened my phone and I couldn't believe it was only up 10 basis points because it was guaranteed to be up 20. But now, of course, it's up 20.
Yeah, I mean, it's almost guaranteed, right? Because it's a machine.
The sarcasm is in our voices here. If you are trading this, then, we're
let me clarify what I just said. In the 20 years that I've stared at my screen all day, every day, the repetitive nature, and sorry, let's just boil that down mainly to the last 10 years when the machines and the retail and this whole phenomenon has really taken hold, the percentage, when you get a situation like we just described, everyone has to, you're at all-time highs, massive cash positions, volatility gone down to zero, and you get another bit of good news and the machines ramp it higher. It is 90% plus of the time you see that happen.
Yeah, the next morning.
Yeah, and it's because there's nothing to stop it.
No.
And they're not, and again, just to reiterate, there's not human beings trading that. It's just machines doing their thing.
Tick, 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 tick,
just,
tick, tick.
And we'll get a little bit of a dip on the open today, in the US Open. Bang. That's 90% plus that's going to happen, especially because we haven't had a little dip yet. It's been ramped, right? And it's ramped again. So we'll get to the open, it'll go bang. Then the question, and then it'll probably try and go bang. My view is that it's just all exhausted, but my view is irrelevant, utterly irrelevant, because we're not dealing with humans. That's my...
Agreed.
So, yeah.
Right, we've got a few questions coming in there, so let's keep them in our mind. Micron, I don't know if you look at United Health, do you?
I mean, listen, I know what they do and I follow them, but I don't really have a strong view.
So let's add Micron to the list, but then we'll start with CoreWeave, shall we?
Yeah, so CoreWeave is one of the hot new things in tech, recent IPO. And for those who don't know the company, they've got a really interesting business model. They essentially are warehousing or setting up a massive data, GPU to be specific. What they do is they buy all of NVIDIA's chips off them, they warehouse them in data centers, and then they rent them out cheaper than otherwise would be to the hyperscalers. So it reduces the cost for the hyperscalers. They've got 200% revenue growth for obvious reasons. All the big hyperscalers are their top customers, but they have a huge amount of debt because it's a massively capital intensive upfront.
Right.
$15 billion worth of debt. That was the reason why the stock was down last night.
So this company is the picks and shovels. They're buying the picks and shovels and then renting it to the gold miners.
Yeah. I mean, it's a genius idea.
Yeah.
It is capital intensive, of course. Let's look at the valuation of this company. Listen, it's fair to say that this is a hot AI stock.
Yes.
Right? Okay, there's no question about that. So let's put it in the same category as Palantir, shall we? 20 times sales, 200% revenue growth. Palantir, 126 times sales, 48% revenue growth.
Let's go through that again.
Yeah.
So what is CoreWeave's price to sales?
20 times.
What is Palantir's price to sales?
126 times.
And which one's growing faster?
By a massive margin, CoreWeave. Like literally, it's 4 times faster. So why?
So that price to sales comes down at a much accelerated rate. And CoreWeave, realistically, in 2 years' time, is at a normal price to sales.
Yeah, I actually think CoreWeave, I'm a bit worried about the balance sheet, to be honest. But again, that doesn't really matter. We all know that. Look at Meta. Every single time they open their mouth to tell us they're spending another 100 billion, the market goes bang. So, I mean, they're spending money in exactly the right area. So I think the market will get over that pretty quickly. Plus, but I think CoreWeave, I actually wanted to short this because it had just, you know.
Yeah.
Then I went and looked at it closely and I realized that that's wrong. And I think that this is actually going to be a big winner. Question is, where do you buy it?
Yeah.
Now, it's off 6 or 7% pre-market, so perhaps.
Down 9.
I personally, they only listed a couple of months ago, right? So I like to give companies 3 months or a quarter, at least a quarter, if not 2, as a public company to get a feel for what's going on. Plus, it's hot, right? It's really hot.
Any negative rhetoric in AI, and this thing's down 15-20%.
100%, yeah. I mean, this is high. This is a high beta play on AI.
High beta, high risk.
I mean, this is like Nvidia on steroids.
Right. And Jensen invested
with a debt problem.
Right. Okay. Next.
Yeah. So next up, what have we got? Questions?
Do you want to have a look at Micron?
Sure. Micron is Donnie 1. Micron is, listen, there's a few people who have tried to come out and sell this. Brokers have come out and tried to sort of downgrade it, but that's 2 out of, let's say, the top 20 analysts. The rest of them are all big buys on it. They just raised their guidance again, not only in DRAM, which is obviously the nuts and bolts of their business, but also AI, which is the new part of their business.
Take everybody through what DRAM is, sorry.
So DRAM is direct random access memory, which is the most commoditized, old-fashioned form of memory. When I say, so this is why this company is a cyclical company. It's just the same as being involved in copper or whatever it is. It's a commodity, whether it be copper or DRAM, that goes in cycles. There's nothing particularly sexy about it.
No scarcity.
It's a hard investment. Now they've got a secular bull thesis under them, which is the AI and the high bandwidth memory, which is being tailored specifically to the likes of Nvidia, who are their new customer. So these guys are going through an inflection point. So AMD, I mentioned this a while ago. AMD has gone through their inflection point. Micron is also going through an inflection point. Finally, all right. This has been a battleground stock for many, many, many years.
Yeah.
It's a bit like Freeport, actually. It's very similar to Freeport, right? It's exactly the same. One trades on copper, one trades on DRAM, and it's got a similar price action, and that's just the way it is. But this is a different kettle of fish now. It had a huge breakout, a pullback from that, consolidation, now raised its guidance again. So, and it's cheap, right? This is one of the only ways to play AI that's cheap. And that's
not that people pay attention to valuation anymore.
Not that it matters, but you know, the big funds do, right? So the long onlys who are considering adding a value name, whether it be Broadcom, everyone in the world is already long Broadcom, and then you've got Marvell and you've got Micron as options, which most people I would imagine are not long. And when I say people, I mean professional people. So the answer to your question is I really like Micron. Particularly after they've just raised their guidance again, which basically just is a middle finger to those people who downgraded them the other day.
Okay, so
I'm just a bit, yeah, so just, yes, buy it on dips would be what I'd say.
But conviction level?
A conviction level for Micron.
It's not in your portfolio.
It's not in the book, only because it's just not in my nature. I was keen on Micron about 80% lower, because that's the way my brain works. I'm really bad at chasing things, and I need to get better at it because that's the market we live in forever. But yeah, I love Micron, but I'd wait for a little dip because it is a volatile stock. Remember that. This is not Nvidia. It's not my Mag 7. It does have volatility, and that's just the way it is.
Now, our good friend, the Marvell.
Marvell, yeah. So they, again, this is in the same boat as Micron, right? It's not a popular long with the mutual funds and the long onlys. A lot of people don't understand what they do, and it's going to take some time, and it's subject to volatility, and it has random days up and down. Like yesterday was a great example. It was down. The day before yesterday, it was down 2%. Every other stock in its group was up.
Yeah,
it's completely random. It's one of those stocks. But if you look at the chart, it's held on to the technicals perfectly, which is encouraging. I just think this is one to own. I own it in the book. Happy to own it here. And the major reason for that being that no one really knows what's going on here, and it's going to surprise to the upside, and it's not remotely crowded. Technicals have held in, and it's in a great space. So, and also don't forget when this thing can move, right? When people decide, oh, it's time to get into Marvell again, it really moves.